Today I'll be sharing with you 4 patterns for profitable trading. For those of you who don't know me, my name is Brian and I am a full-time Forex trader who was able to leave his 9-to-5 job a few years ago. I make tutorials on Forex trading and upload weekly my analysis. I also have a subscription service, so if you're interested, please leave a comment below. So let's dive in. Okay, so there are 4 profitable patterns that I use in my trading strategies. The first one is double top, head and shoulders, flags, and triangles. Now I use them all in different ways. Some of them I use to actually place trades, some of them I just use for additional information to use with other strategies that I've shared in the other videos. So double top and head and shoulders, I personally use to show or to understand that there is a reversal going on in the trend. So it could give an early sign if I have a long-term trend line and there's this massive head and shoulders at the end of it, then I know that price probably won't follow that same trend anymore, and I'd be looking until the new trend is established. So what is a double top? Well, price comes up, makes a top or a high, retraces, comes back up, and price stops before making a new high or stops right around in that area, and then reverses. Head and shoulders, so it looks like somebody's shoulders and then a head in the middle. So price comes up, makes a high, goes down, and comes up, makes a new high, and then it comes down to about that same retracel, and then price tries to go up for another new high, doesn't, ends up going to about the same height as the left shoulder and then goes back down. I like head and shoulders because it's really good in large time frames for showing a trend reversal in a big way, but also when you pair it with a breakout strategy, it works really good because that neckline ends up becoming a really strong zone that price ends up bouncing off of. Flags are, what they are is a sustained price and move up, and then sideways consolidation, and then a breakout out of that. And it looks like a flag. This is a good one because usually consolidation is usually followed by a trend continuation, especially when it looks like this bullish flag. So again, I would wait for price to break out and then retrace and look at entering with a breakout strategy. Triangles, I don't trade too much. I kind of just draw them and I'm aware of them. I find they can be quite hit and miss. Maybe I just haven't taken the time to properly learn the ins and outs of them. But I like them when I'm looking at maybe taking a trade. I'll understand that, okay, if a price bounces off this trend line, profit is going to be limited because the next converging trend line to make the triangle is getting quite near, so maybe that trade isn't quite worth it anymore. And instead of maybe looking at taking profit at the low, structural low, I might look at taking it at the bottom of the triangle instead. So I'm going to give you a top tip. So I like to use what's called the wolf wave. Here's a picture of it. So it's basically a descending or ascending triangle with 5 points, as you can see in the picture. But the key thing here is after hitting point 5, there's a high probability that price will continue on until it meets the joined line of point 1 and 4. So if I'm looking to take or make my target off of a descending triangle like this, then I'd be looking to go to 0.6 instead of 0.4 and 0.2. I might use 0.4 and 0.2 to maybe move my stops to different structural lows. Okay, so now I'm going to dive into some real examples and we're going to find these 4 patterns together. Okay, so now first pattern I'm gonna share with you is with the Australian and New Zealand. This is on the daily, and I'm gonna show you how the Head and Shoulders pattern can be quite helpful. So I've made two circles. Now I don't know if you can see them or not in there, but if I take a tool over here, Head and Shoulders, I can draw left shoulder, head, and then right shoulder. And the other thing worth noting is this is a very clear Head and Shoulders pattern. The head is also forming the top of a major trend line, and it's also showing the prices reversing. So if I'm looking to take profits, I'd be looking to take it down at this trend line or quite low down here. Anyway, a lot of people will use the mirror image or a fib extension of it, and those are totally fine too. Let's see what it looks like. Yeah, so a fib extension would have been right around this trend line. So that's exactly where I would have been looking to take profit. In fact, I might have taken profit a little earlier around here. So if we look at actually trading this setup, again, we would have used the breakout. So price breaks out, retraces. There's an engulfing bar, bearish engulfing bar here that happened right at the retest. And like my previous video said, we would take uh, 0.618 fib entry on there. Oh, I might have drawn that the wrong way. Let's flip that around again. It goes. Okay, so my entry would have been there. My stop would have been at the structural high, and then my target would have been, somewhere around there. So we're looking at a 4 risk to reward. It would have been a winning trade. And now, moving on to down here, this is an inverted Head and Shoulders. So it also signifies a reversal. And the head actually ended up being a strong point in a trend line. So if I take that, there you go. You can see that, and again, the extension was reached. So again, that's where I'd be looking to take profit. It didn't have a very good retest. It did break out and then come back down. So let's see what it looks like on a 4 hour. So it did come down and retest it. I don't know if I would have entered this one, but it would have been worth noting for sure. Also in this example, we can see lots of double or triple tops. So price made a high, came down, came back up, got into that zone. It didn't hold, it didn't close above, and then you can see that candle ended up being a bearish engulfing bar. So a strong push down off of that and retraced deeply following. So this is an example of a double top, 1, 2 down, and they are really all over the place when you start looking for a double top, 1, back down, 2, so 1, 2, and then up. Just trying to look for the clear. Top in, comes back down, boom, second top, and then down. They're all over the place. Okay, now I'm going to find some bullish flags. So flags can either be, they can be different ways. So you always have a sustained move, which is the pull, and then, let me just fix that. Price can do a few things. Either dip down a little bit, or they can be more parallel, like consolidation, or they can point in like this. And each one of those flags can mean a different thing. If the flag is like this, then price could go up, or price could fall out of that. If price is consolidating, then most likely price is going to go up. If price is going down like this, it's correcting, which means after the correction, it's going to continue its trend back up. And then if the triangle is ascending like this, then it most likely means that price is going to fall out of that. Price is losing its strength and it's going to come down. So there is one flag right there. So it's descending. Once price came up, it flew up. One thing you can use for targets on flags is fib levels. So you take the fib of the pole, and then 1.6 or 1.4 is what it will usually find resistance at. And then, okay, where did the other one go? Here's one. So it might be less apparent, but sustained move up, and then price was like that. So it doesn't have to be exactly straight up. Price never moves vertically, but it should be fairly vertical. So price went up, it descended, and then boom, straight up. And again, it definitely hit that fib extension. Okay, so the other one is triangles. So triangles are you can kind of see them everywhere where trend lines are converging upon themselves, and once it gets squeezed so tight, as in down here, then it's probably going to either break out and the trend may change. So here we have a triangle compressing upon itself, and we can count. I like using letters A, B, C, D, E. After E, we would be looking for a long. Okay, now if you look at that E, it also touched down here. So it is and we can see the RSI became oversold, and then it changed quickly to back to neutral, and it touched that trend line perfectly. So I would be looking at going long. So price did break out. We could be looking at a breakout strategy. It came out of here, it could retest, and then look at going up to Wolf Waves target. So we join the A and the D letters together, and you can also see the importance of this line, because price touches it before it even knows that that's going to be a line that cuts through, and it's already reacting off of it. So it's a pretty cool feature to see how strong this triangle may or may not be. So there we go. The best thing for you to do is just to go back, do some back testing, try and find these on your own, see if you can see any other similarities, maybe how to trade them, other ideas. If you have any, leave them in the comments below and I'll maybe make a video on it. There we have it. Patterns can be good for spotting reversals or just getting a general understanding of what the market is doing and why it's behaving in a certain way. So all these videos are leading up to one big price action strategy video. So you don't want to miss it because I'll be uploading it in the next few weeks. So if you haven't done so already, please hit the subscribe button and I'll see you next time.